Hello traders and welcome to another video review. Today is Thursday, the 10th of June 2021, and this is a very special day because the Forex calendar is full of key economic releases today. So please be prepared for a rather busy day. What I mean is that the ECB, the European Central Bank, will announce today the interest rate at quarter to 2. Together with the interest rate announcement, there will be published deposit facility rate, marginal lending facility, and monetary policy report. 2:30, the ECB will hold the press conference, so that will be the key event of today as well. In the meantime, we have some speeches from MPC member Andy Haldane at 2:05, and during the New York session, we have a data release from the US in form of the consumer price index, which is a key event for today during the London session. Unemployment claims, continuing claims from the US will be released today as well. At the end of the day, 7 o'clock, we have the Bank of Canada Deputy Governor Timothy Lane speech scheduled for release at 7 p.m. So, what's the big deal about the ECB interest rate announcement today? Well, the key thing is that for an extended period of time, the interest rate had been kept on a very, very low level, particularly 0%. That means the money lending is cheap because the percent is 0. So the money lending is cheap. There is plenty of money in the circulation. So any hint from the ECB president regarding the potential rate hike, it doesn't matter how big that rate hike would be, is a key risk factor for all of the market traders, and the market will position itself ahead of the time for this potential announcement. Now, the more surprised market will be, the bigger the reaction on the interest rate announcement and possibly during the ECB press conference. So please be extra focused during this time when trading on the financial markets. The same situation, but not to that extent, is during the New York session when the consumer price index will be released. Because if the consumer price index is again higher than 0.4%, which is the forecast for the consumer price index, then of course we will have some sort of the inflationary pressure building in the US. The last reading was 0.8%. The market participants expect the decrease to 0.4%. So any hike in consumer price index is not very welcome here, and will be very good for the dollar. So I think we today should take a look basically on the euro dollar, because it's a very busy and important day for this pair. Let's take a look on the euro dollar from a bigger point of view. And as we can see here, we are still trading right in the uptrend since the end of the May 2020. We are still making higher highs, higher lows up to the day of 6th of the January 2021. Then we got ABC correction, and now the question is whether this move here is a continuation of this uptrend, right, or if this is another leg of a corrective cycle. So that would be ABC first leg, some kind of a correction to the upside, second leg, and the third leg to the downside. So the big correction would be then completed, right? The main scenario is, however, that this is a start of a new, this is a continuation of this uptrend in the form of a new impulsive wave to the upside. So that's the daily time frame chart. We know where we are. Let's just focus on the lower zoom. What do we have here? The first thing is we broke below this short-term trend line that was made since the end of the March, right? We broke below it. The new local low was made at 1.2104, and this decline, as you can see, was in line with the previous decline, minus 1.36, minus 1.32. Those are the same corrections, almost 100%. So there is still no overbalance of price and time. However, this decline and then inability of bulls to break back above the 1.22 level and then above the wave B high 1.2243, and then inability to break above 1.2265, which is the local high from the 26th of the May, tells us that there is kind of a weakness in this market already. And if it is so, we should see a sharp decline towards the level of 1.1993 and a sharp decline in the RSI below the level of 50. So then, of course, this kind of a behavior would mean that we are changing our sentiment from the positive, that's been a major factor for the up move on the euro since the end of the March, to the negative, that might be triggered by today's ECB interest rate announcement and eventual hints during the ECB press conference. So please keep an eye, first thing, on 1.22 and highs of the wave B 1.2243 as a level of the technical resistance for the euro, and then support 1.1993. That move from the end of the March, the beginning of the April, this almost 3 month move might be the move in anticipation of the key ECB interest rate announcement, right? So this market moves up, but today might be a little bit disappointed and the sharp decline might happen. On the other hand, the key technical resistance is still the high from the beginning of the year, the 6th of the January 2021, 1.2352. If this level is violated, then of course we will have a uptrend continuation. So that's the euro for today. Let's take a look at another euro, which is euro to the British pound. Okay, so the British pound and the euro are in quite different situation. The first thing is there is nothing going on here. Almost nothing is going on here. The 61% of the Fibonacci retracement is still being tested. It's been tested once, it's been tested for the second time. The volatility is very, very limited. The market is still in the long term in the downtrend. The key technical resistance 8,722, 8,739. This is the zone for the technical resistance. It's still active and it's still valid. So the odds for this market is to spike up, being capped around this level, and then go back to the main zone, main consolidation zone in the response for the today's ECB announcement, potential ECB announcement. There is Andy Haldane, Bank of England member speech as well. So this pair might be influenced today many times. So that's two key important pairs that will be definitely under the in the spotlight today because of the ECB. And at the end of this analysis, let's just take a look at the euro to the Japanese yen. Not much has changed here. We still have the high at 134.09. We are going lower. The middle of the channel has been rejected. We are going lower towards 1.3234 as the technical support of choice. The market is about to hit the 50 level, which is somewhere here. So this is the neutral level. And of course, if this level 132.34 pips will hold, then of course we can expect bounce and the uptrend continuation, because the RSI will hit 50 points. If this level is violated, then the next target is 130.93, and we will enter the negative zone for the RSI. So the bears will be in the short term in charge for the market, and then there is a chance that we will have an overbalance of price and time if the level 130.93 pips is hit. So that's my point of view for today's trading day. Please keep an eye on the charts during the ECB interest rate announcement and press conference, and I hope I see you guys tomorrow with a new fresh technical analysis. So take care and bye bye.